Now for one of those ratios that you do not hear of very often. Okay, it's called our interval measure ratio. And don't worry, I'm going to help you actually rationalize what's going on with this ratio so you actually think, whoa, this is fun. Let's talk about this. All right, so what is the formula for the interval measure ratio? If you just want to memorize it, it's current assets over average daily operating costs. And right there, you kind of have a hang up, right? You have a sense that there's more to it than it seems because you're looking average daily operating costs. There's some other calculation that goes into it. So before we get ahead of ourselves and just commit this to memory, we need to make it make sense to us. What is this measuring? And really, it's measuring how long we have to survive. If everything stopped right now, how long do we have to survive? All right, if we weren't able to bring in one more dollar of sales, how long would we have to survive? All right, survival interval. Just try and tie those words up together and you understand what's going on here. So before we actually take a look at this formula, first we have to take a look at average daily operating costs. And that's actually very, very simple. Average, you're looking per something, so per day. So let's say average. And think, all right, before I'm done writing, try and think, how would you figure out your daily operating costs? Okay, I have two more words to write. I'm not going to write the whole thing. How do we figure out the average daily operating costs? First, we know how many days are there in a year. 365. And operating cost, how do we figure that out? We would look at our income statement, right? Right? Of course, we'd look at our income statement because the income statement is going to show us how much we're spending to operate the business. So our SGA, our sales, general, and administrative expenses, yep, those, the money we have to pay to keep running the show, remember that from accounting? That's what you're going to take into consideration. So you look at your income statement for the year, all right, so the whole period being a year, and you'd say, how much is that? So let's take a look. So it'd be total, make sure this is a frame, cost of operating. That's it. Let's just put op there because I want to end right there. So you would take that. How much is it total we had to pay out to run the show divided by 365? And that would give you, whatever the answer is, would give you your average daily operating cost. How much are you spending per day? So we take the total for the whole year, we divide it by the number of days in the year, and we find out how much we're spending every single day. And now remember, the interval measure ratio just wants to know how long do we have to survive. If we're not able to collect any more money in sales, how long would we have to survive? And that's a pretty fun ratio to think about. Okay? I mean, hopefully you're never stuck in a jam where, if anyone ever brings this up, you start throwing up some flags, all right? We have to start worrying about something. Why are you worried about how long we have to survive? Why are you worried? Do you think something bad is about to happen? But the good news is, if someone says, hey, we are not going to be able to bring in another dollar of sales, you know to jump to your interval measure ratio because it'll let you know how long you can survive. Maybe they say, hey, no one's going to buy anything from us for another 6 months. Will we last 6 months? Will we be able to keep running the show for 6 months? The interval measure ratio will be able to give you a heads up. All right, so we know how to find the average daily operating cost. So let's just give ourselves an example. Let's keep it simple for ourselves. We'll say 365 and just add a bunch of zeros because I don't want to make this too cumbersome for ourselves. So, all right, so we'll say this one, obviously, and well, 1, 0, 0. I like to take out the zeros just to let myself know that I've already taken into account the math. You don't have to do that. That's just the way I like to do my own weird math every now and then, not always. So we would say that per day, it's costing us $1,000 in expenses. That's all this means. That's our average daily operating cost. It costs us $1,000 every day to run the show. So what else? What's next after this? Now we take into consideration our current assets. This formula that we just went through was the average daily operating cost. That's how we figure it out. And now we know that every single day we're spending $1,000 to run our show. Because for the year we had to pay $365,000 in expenses, and we divide it by 365 days. But now we need to know how long are we going to be able to run the show without bringing another dollar of sales in. And we're going to say current assets. Now, really quickly, why are we taking current assets into consideration? Try and think before I'm done writing. Because this is what we're going to be able to liquidate. Okay? So we're looking within a year, what are our expenses, and what are we able to liquidate within a year? See how it works? So this is what we expect to be able to liquidate if the buck stops. If we're not able to make another dollar of sales, at least we can start, liquidating some of our supplies. All right, some of our inventory. I can't really say inventory because we're not bringing another dollar of sales. But maybe we find some outside buyer without the traditional route. We could liquidate those assets in some way. We may not be able to sell it to our customers, but we'll find someone else that's willing to take it off our hands. Maybe it's one of our competitors. Maybe they're willing to take it off our hands. All right. So we'll say divided by, so current assets is going to be divided by our average. This is why we had to calculate it first. Our average daily operating costs. And that's how you find the survival measure ratio, which is really the interval measure ratio. How long do we have? And it's taking into consideration all the things you can liquidate within the year. So let's say for current assets we have let's just throw out a number that's easy for us to divide. Well, any number at this point, since we boiled it down to $1,000 for our average daily operating cost. So we'll say in current assets we have $20,000, which is not a lot at all, and you'll see why. So $20,000 in current assets, and our average daily operating cost is $1,000. So to keep paying our bills on a day-to-day basis, we're going to be liquidating stuff, but we only have $20 worth of stuff. So guess what? We're only going to be able to last, take out my zeros, only 20 days. That's it. If the buck stops right now and we can't keep paying our bills, we have 20 days to survive. I would like to write down the word days. That's it. That's how you calculate it. I call it the survival measure ratio, but everyone else calls it the interval measure ratio. How long can our current assets keep us afloat if we were not able to bring in another dollar of sales? You need to know how much you spend on a daily basis to keep the show running. And obviously, you're not the only one that's thought of this. You're not going to be paying bills every single day. Obviously, some of the bills are monthly. Some of the bills you may be paying biannually, whatever. So that's why we're going to look at the end of the year, see how much you pay, your total operating costs, divided by the number of days in that year. And I emphasize that because obviously we know about leap years. Whatever we get, we're going to see, all right, so if we had to keep liquidating our current assets, because our long-term assets, we don't expect to be able to liquidate anytime soon. If we kept liquidating everything we have that can be turned into cash within a year, how long do we have to survive? That's 20 days in our example, but it's just current assets divided by the average daily operating cost, the amount of money we expect to spend every day just to run our show. Okay, so that's your interval measure ratio. Which is a really fun ratio to actually keep in mind, but if you ever have to discuss it, it probably means things aren't going too well.